there's a huge pool of capital that hasn't even touched it yet. And so that's what you're going to see come in through the ETFs. And that's that next jolt.
가상자산 시장에 아직 손대지 않은 거대 자본풀이 생겨날 것이며 이것들이 비트코인 현물 ETF를 통해 들어올 것이라고 주장하고 있는 인물은 크립토 시장의 거물, 갤럭시 디지털의 CEO 마이크 노보그라치입니다. 비트코인 현물 ETF 출시 후 시장이 지지부진하게 흘러가고 있는 가운데 노보그라치가 생각하는 향후 가상자산 시장 규제에 대한 전반적인 의견과 거시적인 크립토 시장의 전망에 대한 그의 디테일한 인사이트에 대해서 함께 들어보도록 하겠습니다.
Good morning, everybody. I know that it's been a great morning of hearing from some of the world's biggest titans, and this is no exception. It's an honor to be here with a man who needs no introduction, Wall Street legend and head of $5.3 billion Galaxy Digital. Mike Novogratz is one of the most vocal and committed backers of cryptocurrencies to date. Since launching in 2018, Galaxy has been at the forefront with over 1,000 institutional partners and 100 unique crypto assets. And of course, what was a huge moment, he was also amongst the first to issue a Bitcoin ETF to the market just a few weeks ago. So Mike, congratulations and thank you so much.
Thank you.
So Mike, you were on this stage a year ago, and needless to say, the world looked pretty different. Give us a 30,000-foot view of where we are from a macro perspective and also from an industry perspective.
Sure. So from a crypto perspective, we came out of the Fed changing policy in 2021 and starting to hike rates aggressively. And so you would think hard assets like crypto and gold would go down, and they did. What accelerated that was all the fraud and bad behavior in the space. And so you had FTX and Celsius and just an embarrassment of bad participants. And so crypto's built on trust, and we lost a lot of trust. And so you had what's a classic market capitulation. Everybody hated it. You couldn't sell enough. Everyone deleveraged. No one's ever going to touch it again. And so when there's complete blood on the streets in markets, it's when you're supposed to come in and buy. It's very scary. You might look like an idiot, but that's when the greatest buying opportunities were. So Bitcoin at 18, 17,000, with hindsight was a great buying opportunity. So what switched? How did we go from all those headwinds to tailwinds? First, the Fed got closer to finishing their rate hike cycle, right? They're hiking. They're not going to hike forever. And so you could sense and then see the pause, and now we're going to start the rate cutting cycle. And so that was the macro tailwind. You had a weird combination of good things happen, right? Grayscale, which was this big closed-end fund full of Bitcoin, sued the SEC and said, this is unfair, you won't let an ETF happen. And they won. The reason we have an ETF is not because Gary Gensler decided, I really love crypto now, or the Biden administration, is because they lost in the courts. We have three parts of government, and thank God for the courts in terms of the crypto industry. And so all of a sudden we're going to get an ETF. Larry Fink, one of the most influential asset managers in history, came out and said, hey, this thing called Bitcoin, I know I used to think it didn't serve a purpose, but it's pretty important. And so the fact that Larry Fink got orange-pilled, monstrously important, right? Because it represented institutional investors everywhere. There are lots of different players, but he holds a unique post as the head of the largest asset manager in the world. And all of a sudden, crypto's always been about a macro story and adoption. You could start sensing, adoption is going to come. And so people start front-running that. We also cleared up Binance, right? The biggest crypto exchange in the world is Binance. There were all this worry, is the money there? CZ settled with the government for some KYC fines, paid a huge fine, and stepped down. And so the risk around Binance, the biggest player, went from here to here, right? So now it's an exchange, it's still the largest exchange, but no one thinks, oh, it's gonna get shut down in a week. No one thinks they don't have the money. It's just an offshore player. And so we took a lot of the tail risks away and put a tailwind together. And now you got a position where, what's left to really get us going? Well, the US still is in a stalemate on regulation. But the optimism is there's 11 months left to an election. And no matter who wins, Democrats or Republicans, Gary Gensler's not going to be the SEC chair. You are going to get some legislation. You're going to get movement. And when I go to DC, there is bipartisan agreement on, you know, 2 pieces of legislation. It's being blocked by Elizabeth Warren and Gary Gensler and a few other players. But that will change. And so when I look at crypto now, when I look at the whole industry, I'm like, we're going to get regulation in the next 12 to 18 months. We're going to have the Fed cutting rates. And we've got this new vehicle of adoption that is just getting started, right? The ETF is 2 weeks old. Usually ETFs get announced and they don't start trading for 6 to 7 weeks. So they give the sales forces a ton of time to be able to go make their phone calls. In this case, because of the grayscale thing, they had 1 day. And so if you're the Invesco sales force, you haven't even started making your calls, or BlackRock, or now we've got 9 big sales forces, huge sales forces that are selling Bitcoin. And that's a big, big deal.
And that's on the back of a very strong year for Bitcoin, right? Like we talked about, I think up, over 150%. And part of that really is, for those that don't know, is about that limited circulation, right? I think like over 70% of the supply was not changing hands. Yeah. Why is that?
So Satoshi Nakamoto, when she wrote her paper, she was really writing it as a response to what she saw, or they saw. I'm going to be really
do you know something we don't know?
I just like to make Satoshi female. It just makes me feel better.
I love how you're laying this macroeconomic framework, but I want to kind of get back to Bitcoin as kind of this store of value and beacon of hope, right? So we have these spot Bitcoin ETFs, right? You issued one of them that went to market 2-3 weeks ago, and you've been a big proponent of adoption and kind of leading the charge on the Bitcoin wagon early days. Tell us what this means broadly for the industry, like kind of at the same time as we're dealing with inflation, we're dealing with all of this fiscal deficit, all of these, you know, the widening of the inequality gap. Bitcoin can kind of now serve a retail base in a new and different way.
Yeah, listen, I mean, the reality is it was always complicated to buy crypto, to buy Bitcoin, right? You had to set up a wallet, you had to set up a Coinbase account, you had to do something different than you used to do. And it started as a young person's revolution. The bulk of the money in the world, and the bulk of the money in the United States, is held by the baby boomers. And the baby boomers in general talk to RIAs, registered investment advisors, to manage their money. The ETF is the product designed for registered investment advisors, you know? And so we are now plugging in to this giant group of RIAs. Mm-hmm. Right? Bitcoin has always been sold, not bought. You had to tell someone the story. They call it orange pilling. I sit down with you and explain why I think it's important, right? And in the long run, the technology of Bitcoin doesn't give it its value. As wildly cool as the breakthroughs were, I could take the Bitcoin blockchain, I could fork it, which just split it in half, and call it the Novo chain, and it probably wouldn't be worth that much. Same technology, right? What gives Bitcoin its value is the social construct. I say it has value, you say it has value, therefore it has value. It's the same thing as gold. It is, you know, it's not like gold has inherent value. It's valuable because we have a social construct around it. It's why it drives me crazy when guys like Jamie Dimon or Elizabeth Warren.
I was going to ask, yeah.
Well, you put Jamie Dimon and Elizabeth Warren in the same bucket these days. It's kind of funny. Says, well, I don't think it has value. I'm like, well, I don't care what you think, because I got 180 million people that think it has value, including Ray Dalio and Jeff Yass and Pete Brigger and Stan Druckenmiller. And I was like, I'd take their track records over yours, Jamie. And so you don't need the whole world to think it has value. You just need more people and more money to think it has value. And what I see is going to happen is every RIA is going to finally say, hey, you should put 1 or 2%. Like it's like a stock allocation. And there's a huge pool of capital that hasn't even touched it yet. And so that's what you're going to see coming through the ETFs. Mm-hmm. And that's that next jolt.
So where do you see growth being strongest, though, over the next 12 months, as you forecast it out a little bit?
I think you're going to see this institutional creep. It's going to start with the RIAs. But listen, adoption always happens in a relatively similar way. You already have some early movers in the pension world, in the endowment world. Now I can say, I'm not going to get fired. It's not that complex. It's just like a stock. And you're going to see some of those guys move in. And then they're going to say, well, what's next? The Ethereum ETF is coming, so maybe I should be part of that ecosystem. Hey, once we realize, and I think one of the most important things of this ETF is there is an inevitability that crypto is going to be part of the financial landscape. We are going to get legislation done in the next 18 months. You can talk to Hakeem Jeffries, you can talk to Tom Emmer on the other side, Republican and Democrat, they will tell you we're going to get legislation done. And so once this inevitability happens, it just makes it easier for other people to invest. And we're seeing that already. We're seeing that in our asset management business, raising more capital. We're seeing that in signing up more clients to trade with us. It's not like a gold rush that everyone's running like mania like we had in 17 and 21, but it's better for the long run that we have this slow move of the herd. And so it would be surprising to me if the crypto business wasn't a lot bigger in 2 years than it was today.
Mm-hmm. Well, do you think that the SEC is going to approve the Ethereum ETF next?
I think they have to. Like the logic on the Bitcoin ETF was, and the judge was like, what are you talking about? You have a futures ETF, but you don't want a cash ETF because of some hocus pocus witchcraft? Shut up. And that's basically what the court said to the SEC. And we already have a futures Ethereum ETF, and so that logic has to hold. Mm-hmm. And so I think almost by definition, you're going to see an Ethereum ETF.
Do you think that logic translates to getting the Coinbase lawsuit thrown out? When are we going to see that?
No, though I think there's a lot. Listen, we have a Supreme Court that is pushing on government overreach, right? We have a very conservative Supreme Court. They have been pushing on government overreach. This SEC has been reaching. You can call it overreach or not, but they've been reaching. And we will see how the courts do. I actually think the next head of the SEC, Republican or Democrat, are going to drop so many of these lawsuits that Gensler has issued because you see the inevitability of where they're going to go. And that doesn't look good. I am sympathetic that it's very complicated to decide what's a security and what's a commodity or what's not a security. We have the Howey test. It's old legislation. These are new technologies. And so it's disingenuous for Gary Gensler to say, oh, the rules are so clear.
Right.
If the rules were clear, we wouldn't have two different courts, saying the exact opposite about what works. The rules are nothing but clear. It is costing our industry money. It's costing me personally and my company tons of money, trying to decide where to put people, where to start businesses. And so it's imperative that Congress and the White House gets together and just make some clearer guide rules. People say, oh, all the businesses go offshore. Well, business is moving offshore, but more importantly, it's slowing down the whole growth of an industry. That is going to happen anyway.
Right. On that note, you said that because of the regulatory challenges here in the U.S., you were going to be significantly moving some of your operations overseas. I mean, what a huge loss to America. Can you talk a little bit about what you're going to be doing in the interim? We're expecting regulation in the next 18 months, but...
Yeah, listen, it's unbelievably frustrating. If I was younger and didn't have my own assets to protect and was a little bit more of a rebel, I look like a rebel in my white suit, but I'm actually pretty conservative. I would probably, like a lot of the crypto companies did, flip the bird and just do what I wanted to do, right? So you have a lot of people doing things thinking, yeah, well, Coinbase is going to win anyway, therefore I'm going to, and even Coinbase, they are doing things that they believe are fair, but the SEC says they're not. Well, when you're a more conservative company or you only deal with institutional clients, you don't want to get foul of the SEC. You don't want a Wells notice. You don't want a lawsuit. A, it costs a fortune to fight. B, your clients get nervous. And so a lot of companies like ours are living in this in-between land of not having clear rules. And so we're moving some of our business to the Bahamas, to Hong Kong, to London. I would tell you, some of that we would move anyway because we're going to grow those areas. But if I had clarity in the US, a lot of that would be sitting in my New York office because I like things close. And so it's the lack of clarity that's a cost.
Right.
There's a
Well,
huge tax on crypto companies in America. It comes through our lawyers, it comes through our accountants. We pay 3 times for our audit what we would if we were a non-crypto company. And so like you got a $9 million audit for a small company like Galaxy, or not so small company, but like we're a medium-sized company. Like that audit at a normal place would be $3 million. So it's like a $6 million crypto tax because our government keeps putting the fear